Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of NZD USD, New Zealand dollar, US dollar. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of NZD USD. Yes, I'm in my favorite 4 hours time frame. As we all know, NZD-USD witnessed heavy selling pressure this week. In fact, currency pairs like Euro-USD, GBP-USD, and NZD-USD saw heavy selling pressure after the FOMC meeting when the US dollar became extremely strong. I have already discussed in my other videos as well, okay, that how US dollar became strong. Okay, you can see the chart of US dollar currency index. Okay, overall US dollar was bearish, okay, but from this particular level the whole structure of the market changed. You can see these candles, okay, and just imagine the buying power, okay. And right now if you look at the present condition of the US dollar, then you can see that they look unstoppable, okay. They look unstoppable and probably they will remain bullish in the coming week as well, and until and unless they reach this particular resistance level 93.35 level, they will remain bullish, okay. As a result, okay, as a result we saw heavy selling pressure on NZD USD. In fact, Euro USD and GBP USD also had the same selling pressure, because when US dollar gained strength, other currencies became weak, okay. So what should we do now? Let me take you to the weekly chart once, okay. So this is the weekly chart of NZD USD, and as you can see here, okay, in the weekly chart also, market has formed a big red candle, okay. So this red candle was expected, okay, but one thing that we need to focus here is, okay, that this is a 50 moving average, and we can see that right now market is just standing at the support level. Yes, market is under the dominance of the sellers, but right now market is standing at the support level. So there is also a possibility that market may bounce or market may try to bounce also, okay. But we need to observe the market on Monday, then only we can take a good decision, okay. Because see, overall market, you have already seen the chart, you have understood how much market was beaten by the sellers, okay. And this is the forex centimeter, okay, forex sentiment meter, okay. And here you can see that, okay, in a selling, okay, in a bearish market, or in a, what to say, okay, in a market condition like this, still retail traders have taken or initiated or long position, okay. 77% retail traders are still long, and this is the reason 90%, more than 90% retail traders lose money in the market. Because in a market condition like this, if you still take long position, then I have nothing to say, because you have failed to identify the trend, and as a result you'll have to pay the price. And as we all know, 90% traders lose money, and this is the reason. Because we think that market is falling, oh, we assume that market has reached the bottom and we go for a buy order. Suppose market is going up, we assume that market has reached the top and we short the market, okay. We just do the opposite, and we just forget that market is driven by the big players, okay. And as a result, 77% retail traders are long, and they are crying right now. Okay. And if you have made the same mistake, then my dear friend, you need to analyze the trend first before executing any order, okay. You need to understand the trend first. When market broke this particular level, price level 7100, when market broke this level, okay, it was a clear indication that yes, market will fall, Okay, and retail traders thought that market will bounce and they have initiated a buy or buying position. That is the mistake. Okay. So first and foremost, never ever compromise with the trend. Never assume that market has reached the bottom and market has reached the top until and unless you get the confirmation. Confirmation is always important. Okay. So never ever make the mistake again. And secondly, area of value. In my all videos, I always discuss about the area of value. Area of value is nothing but the best trading opportunity or the best trading spot. In an uptrend market, the best trading opportunity or the best buying opportunity is always near the support, whereas the best shorting opportunity in a downtrend market or the area of value is always near the resistance. Okay. And here we can see that in a market condition like this, okay, there is no area of value. Okay. Whenever we get a market situation like this, the only trading opportunity is to short the market at the pullback. Okay. Short the market at the pullback. Okay. So let the market open on Monday and see how the price reacts. Okay. If you get a good shorting opportunity at the pullback or at the retracement, okay, you can short the market. Okay. You can also take help of the Fibonacci after the market opening on Monday. Okay, you can draw Fibonacci level in your charting platform in the 4 hours time frame, just like me. If your charting platform does not have the Fibonacci levels, you can open a free account on tradingview.com and do all this stuff. Tradingview.com is the best charting platform in this world, at least according to me. And the best feature is that it is free of cost. So you can draw this Fibonacci levels, and if you see that after the market opening on Monday, okay, if market starts going up, okay, then also do not buy. In a market condition like this, do not make the mistake. Okay, if market starts going up, okay, then just look for retracement. Okay, if you see that market has reached the Fibonacci level and it is reversing from the Fibonacci level, you can short the market once market reverses from the Fibonacci level. On the other hand, if market starts going down, then also do not short the market. Do not short the market right away, because right now market is also already in the oversold zone. For that, what you can do is that, okay, keep your eyes in the stochastic RSI indicator. When stochastic RSI indicator will be in overbought zone, this overbought zone, and will be ready to go down again, it is an oscillating indicator. It will be going down again. Okay, so when stochastic RSI will be ready to go down again, just look at the position of the price. If you see that uh, market has gone up, it is a retracement or a pullback, market is about to go down, you can short the market here, here, anywhere. Okay. On the other hand, if after the market opening, if market starts falling, okay, then you can short the market here or here. Okay. What I'm trying to say is that, okay, you need to short the market at the retracement. That's it. So that you get the best price or the best value. Okay, do not short the market right away. That is the only trading opportunity here. In fact, in a market condition like this, that is the only trading opportunity for all of us in almost all the currency pairs, because see, every support level, every resistance level are gone. Okay, they are broken. Okay, so they are not valid right now. So wait for the market to retrace. If you see that market has retraced, it is a pullback, then you can short the market. That is the only trading strategy for you right now. If you want to avoid the market for 1 or 2 days, then you can avoid, okay, and just observe the market. Generally, whenever we get or we see volatility like this or turmoil like this in the market, then we should give at least 1 or 2 days to the market, so that it can settle down. Okay, it can give us few levels or new levels, so that we can trade better in the coming days. Okay, so decision is up to you. If you want to trade, then only trade at the retracement. Do not go against the trend like the other retail traders. That is my request. Okay, and if you want to avoid the market for 1 or 2 days, and if you want to just observe the market, then you can also do that, because it is your hard-earned money. Do not risk your hard-earned money. That's it. Thank you so much. All the best. Take care. See ya on Monday again.